Joining me to discuss the current market trends at midday is Martin Smith from Anchor Capital. Martin, thanks so much for your time this afternoon. So all eyes have been on Fed Chair Jerome Powell. Yesterday he appeared before the Senate Banking Committee. Today he'll be speaking to the House Financial Services Committee. Looking at some of yesterday's comments, really the same rhetoric from the chair, committing to fighting inflation and saying policymakers are not in a rush to cut rates, right?
Yeah, absolutely. And I think that rush is further or the lack of rush, I think, is further impacted by the fact that we're waiting to see what Trump does insofar as tariffs and policy changes and the like. And everyone's waiting with bated breath to see what he does, I think, day to day, not even week to week. And I think until we start to see kind of solid plans come in and solid effects of what he does or doesn't do, I think they are more than happy to just kind of sit tight a little bit. I think at the moment we're pricing in about 1.5 rate cuts for the year. I definitely don't think we'll see one when the Fed meets next in March. And yeah, I can't disagree with them insofar as waiting and see, especially given kind of what's happened on the Trump front and how that may or may not affect inflation from here.
Sticking with matters around the Fed and Trump as well, when Fed Chair Jerome Powell was asked about tariffs, he was really mum. And I think he further said that it's not the Fed's job to comment on trade policy. I think that is a fair comment. But considering where inflation is at, or rather where analysts are pegging inflation, considering that the tariffs might impact inflation and we might see inflation moving higher. Should we not maybe see the Fed and policymakers maybe make some comments on this?
It's a tricky one because I do get his kind of view of maybe not trying to overstep and make comments where he shouldn't. He's also previously said that he's going to wait and see where things end up and what the effect of that is, as opposed to trying to preempt inflation or the supposed inflation that's going to come from Trump's side. So I think they're trying to keep their noses clean and again wait and see where things actually end up, because we've seen again Trump from day to day sometimes policy changes and supposed changes can move. So I think from their side they're just trying to be as neutral as they can and trying to be as cautious as they can, which I think is the right call. Whether or not it turns out to be the right call, we don't know. But from here, I think they're just adopting a very much wait and see kind of approach. I think the market's also doing at the moment.
Martin, you said you're pricing in 1.5 rate cuts for the year, and you're not expecting to see a cut from the Fed next month. Are you pricing in any hikes, considering that inflation picture and risks to the upside?
No, we probably between 1 and 2 cuts ourselves insofar as what we think is going to happen. I think you made me lose my breath there a little bit when you said a rate cut, because I'm sorry, a rate hike, because that's obviously not going to be great for equity markets. Yeah. But again, I don't mean to sound like a broken record, and apologies to be kind of sitting on the fence, but it really is very much a wait and see type of approach at the moment, because we don't really know which way Donald Trump is going to go insofar as his policy or how far he's going to push it. I think if you look at historically, and we have kind of his first term to do that on, he often kind of threatens here, but then the actual outcome is down here. So hopefully that's the case, and we see kind of the status quo remain, and inflation kind of trickles down, and we see 1 to 2 cuts from the Fed, and everything's happy and rosy. But you never quite know.
Let's move over to the tech sector. Following DeepSeek's fueled sell-off in US tech, we've been seeing a lot of headlines around the Chinese tech sector. BYD announcing a partnership with DeepSeek, Baidu also announcing plans to release a next-generation AI model in the second half of the year. Martin, what have you made of, let's say, the resurgence of Chinese tech and just your general sentiments on that sector when compared to US tech stocks?
So I like it. Obviously, there's a big kind of follow through from Tencent into Naspers into the JSE. So from that perspective, nice and positive from kind of South Africans view. But I think in general, it's been a very unloved kind of part of the world for a while. China, I think in general, their market, but the tech side of thing has looked very, very cheap, especially relative to the US. So it's looking cheap, but it has been very unloved. Sentiment's been very, very low. There's even been things like Tencent being added to that US military watch list last month, which you saw quite a big sell-off there. So it's not been a great place to be, but you're starting to see that sentiment turn, like you mentioned. I think the big catalyst was that DeepSeek news that came out a couple of weeks ago, and that's really led to a bit of a resurgence and a little bit more kind of uptick in sentiment there. And I think if that continues, you can see these stocks really re-rate because they are looking very, very cheap fundamentally. So I think, again, any kind of turn in sentiment there or any kind of continued turn in sentiment, I think will be very, very positive for that market. And I think you could also see quite a nice bounce. I think investors are also looking for a place other than the US to invest because the US is looking very, very full. So I think it's positive, and let's see where it goes. But it definitely looks like it's starting to turn.
Let's move over to some local company news. Pan African Resources out with half-year numbers today. Earnings down close to 44%, partially due to lower gold sold. But the miner seems to be optimistic about its prospects. They've mentioned that they expect to be de-geared by the next 12 to 18 months. There's also talk about reinstating an interim dividend. What have you made of that report?
Yeah, absolutely. Look, so we did have a kind of some view into the results because they did release some trading statements on it was Monday.
Yeah.
They released one, so we had a little bit of a view. The shares obviously sold off a little bit on the back of that, but we've also got to remember the share price is up 2x from 12 months ago. So very good if you've held those shares. Obviously, kind of anything in the gold space has been a good place to be. But yeah, I think. Again, I think longer term it's looking a bit better for them from, again, like you said, de-gearing themselves. They're also talking about upping production in SA as well. So you've got that dividend. So there's a few things in their favor. Obviously, this gold price is continuing to do what it's doing. So yeah, I think decent outlook from here.
And Trellidor also out with an update there, forecasting earnings of up to 43%, pointing to a strong performance from Trellidor UK. Martin, is this one you look at?
So it's a small cap. It is kind of one that we have a small eye on. Peter Armitage, our CEO, used to be involved there several years ago, so we do look at it a little bit. But I mean, it's, yeah, like you said, small cap, illiquid share, so it's up about 17%, but on very, very low margin as we kind of speak. But I mean, it's one that whenever you get a product that the name of that company becomes synonymous with a product, I think you kind of know you've done well. So anyone who's got a sliding security gate calls it a Trellidor gate, even though it might not be a Trellidor manufactured one. So they've obviously done very well from that perspective. Like you mentioned, you've got that UK business doing well. They say there's a bit of a turnaround in Taylor. So I think it's doing nicely. They put the runs on the board, and yeah, I think it's ticking up nicely over time.
All right, let's just hit pause on the conversation. Before we get to your stock pick, let's reflect on some counters that have found favor with your industry peers.
Not to get confused with the S&P 500, stock pick is S&P Global Incorporated. People would know them as a ratings agency, but they they are the guys that value companies and countries, and they've been in existence since 1860. They've had 50 years worth of consistent dividend growth. Results were out earlier this afternoon. Surprise to the upside, prices up. What is interesting is that the section of their business is growing has to do with providing data modules and data applications to their customers. We have something like AI helps as well. And considering that S&P itself sits on a mound of proprietary data that they've collected for over more than 100 years, it's the perfect way to lever a large language model to provide something which is unique to their customers.
I'm going for a Swedish company, Evolution Gaming. I have chosen it before. I think it was roughly 9 months to a year ago. They give the content to gambling websites to a large extent. They're one of the market leaders, especially in live gaming, which is mostly blackjack and other card games where you have a dealer. So they have studios where it's real people shuffling and dealing the cards, and people play and look at the video through different websites. Similarly with games, whether it's all kinds of interesting games where you need to choose certain things or play games or crash a car, whatever, that's related to gambling. And the operating performance of the company has been very good the last 4 years, but the share price has traded lower the last 4 years. And the reason for that is a lot of people have grown increasingly concerned about their exposure to non-regulated markets, which means they sell their content to gambling sites which then operate in countries where there's not necessarily a law against gambling, but there's no law. So it's a bit of a gray area. And investors generally don't like gray areas. And increasingly with that concern, people are therefore discounting the share, even though there's good, strong results. But I think we've got to a point now where the share is just too cheap relative to the actual results being delivered. And that a lot of these concerns are being addressed by the company. They are shifting more to developed and regulated markets where it is safer from an investment perspective. So with a very good track record and a lot of the risk being mitigated, I think Evolution Gaming could do much better from this point in time.
So JP picking Evolution Gaming and Rikus picking ratings agency S&P Global. What are your thoughts on those counters, Martin?
Sure. So I actually like both of them for two different reasons. So S&P, just from a strong margin business, a quality business, benefiting from kind of tailwinds in the sector. Evolution, like JP mentioned, has derated significantly over the last few years. I think it kind of listed around COVID times or post-COVID, and it really benefited from like online gambling and things like that. And then as you've seen kind of the world return to normal, you've had a bit of a derating, but it's still a very, very good business and one that benefits from the software around gaming and all of those things. And it doesn't necessarily link itself to one brand of games or anything like that. So it's got quite a diverse portfolio. So from that perspective, I think it's a decent entry point from a valuation perspective. So I think it's looking cheap, and it's a good prospect from here. And then S&P, I think it's not necessarily about valuation; it's just about a good quality business from here. So I like them both, but for different reasons.
So you like both of those stocks, but that's not your stock pick. What are you picking today?
I'm picking Mass Real Estate. It's one that we think can do very well from these levels. We've got about a 50% upside penciled in on our Excel spreadsheet, but I think it's one that benefits really well from the main sectors, which is Bulgaria and Romania, where it operates on. That's about 90% of its retained earnings. And I think you'll see a really good, strong growth come from those regions. LTV will go down to about 19%. So yeah, I think it's one that's a very, very interesting pick at these levels. And yeah, that's my stock pick.
Mass Real Estate one you're looking at. Martin, thanks so much for joining us and sharing your insights this afternoon. That was Martin Smith from Anchor Capital.